In the long run, it's not just how much money you make that will determine your future prosperity. It's how much of that money you put to work by saving it and investing it. The junior high schools and high schools of America have forgotten to teach one of the most important courses of all: investing. There seems to be an unwritten rule on Wall Street. If you don't understand it, then put your life savings into it. Shun the enterprise around the corner, which can at least be observed, and seek out the one that manufactures an incomprehensible product. Visiting stores and testing products is one of the critical elements of the analyst's job. Long-term investing has gotten so popular, it's easier to admit you're a crack addict than to admit you're a short-term investor. All you need for a lifetime of successful investing is a few big winners, and the pluses from those will overwhelm the minuses from the stocks that don't work out. If you can follow only one bit of data, follow the earnings assuming the company in question has earnings. I subscribe to the crusty notion that sooner or later earnings make or break an investment in equities. What the stock price does today, tomorrow, or next week is only a distraction. Gentlemen who prefer bonds don't know what they're missing. Equity mutual funds are the perfect solution for people who want to own stocks without doing their own research. You can find good reasons to scuttle your equities in every morning paper and on every broadcast of the nightly news. Never invest in any idea you can't illustrate with a crayon. I'm always fully invested. It's a great feeling to be caught with your pants up. The worst thing you can do is invest in companies you know nothing about. Unfortunately, buying stocks on ignorance is still a popular American pastime. In the long run, a portfolio of well-chosen stocks and/or equity mutual funds will always outperform a portfolio of bonds or a money market account. In the long run, a portfolio of poorly chosen stocks won't outperform the money left under the mattress. Time is on your side when you own shares of superior companies. If you can't find any companies that you think are attractive, put your money in the bank until you discover some. Your investor's edge is not something you get from Wall Street experts. It's something you already have. You can outperform the experts if you use your edge by investing in companies or industries you already understand. If you're prepared to invest in a company, then you ought to be able to explain why in simple language that a fifth grader could understand, and quickly enough so the fifth grader won't get bored. All the math you need in the stock market you get in the fourth grade. Investing in stocks is an art, not a science, and people who have been trained to rigidly quantify everything have a big disadvantage. If you hope to have more money tomorrow than you have today, you've got to put a chunk of your assets into stocks. Sooner or later, a portfolio of stocks or stock mutual funds will turn out to be a lot more valuable than a portfolio of bonds or CDs or money market funds. When people discover they are no good at baseball or hockey, they put away their bats and their skates and they take up amateur golf or stamp collecting or gardening. But when people discover they are no good at picking stocks, they are likely to continue to do it anyway. People who want to know how stocks fared on any given day ask, "Where did the Dow close?" I'm more interested in how many stocks went up versus how many went down. These so-called event decline numbers paint a more realistic picture. The basic story remains simple and never-ending. Stocks aren't lottery tickets. There's a company attached to every share. You have to keep your priorities straight if you plan to do well in stocks. Average investors can become experts in their own field and can pick winning stocks as effectively as Wall Street professionals by doing just a little research. If you don't study any companies, you have the same success buying stocks as you do in a poker game if you bet without looking at your cards. Owning stocks is like having children. Don't get involved with more than you can handle. Behind every stock is a company. Find out what it's doing. There's no shame in losing money on a stock. Everybody does it. What is shameful is to hold on to a stock, or worse, to buy more of it when the fundamentals are deteriorating. The key to making money in stocks is not to get scared out of them. In stocks, as in romances of divorce, is not a sound basis for commitment.